To show you how to record the purchase of an asset for the company, and then show you also how to add depreciation of that asset over a period of time. There's a few things that we need first. First of all, we need to make sure that we've got a depreciation expense. So if we look in chart of accounts and we look in expenses, we've already got a depreciation expense category already set up. If you haven't got one of those, then you need to create that first. The next thing we're going to do is set up a asset account for the purchase of this particular asset, which in our example is going to be a computer. So again, if we go to chart of accounts and go into account, new, and we're going to have a new account which is a fixed asset. You can see here this explains a little bit more about the types of uses this account has. So we're going to create an account here that's called computers. I'm going to save and new that, and then I'm going to create two sub-accounts of this this particular account. One of them I'm going to call cost, which is a sub-account of computers. Save and new, and the other one is called accumulated depreciation, which again is a sub-account of computers. So if we look there, we've got a fixed asset account called computers, an cumulative depreciation and cost as sub-accounts of this fixed asset. So basically these sub-accounts are used so that you can separate the different costs and depreciation. So in this example, what we will do, we will enter a bill, and in this example we're going to do the 1st of January 2021, first day of this particular year. We're going to buy a £9,000 computer. I won't use VAT just to keep the numbers simple, and in here we're going to allocate it to computers sub-account of cost. So then 1st of January 21, save and close. So this is us purchasing the computer at the beginning of this particular year. If we look at the balance sheet, for the end of January, we can see here we've got a fixed asset of computers and the cost there is £9,000. Now we're going to assume that the year has passed and the value of that computer is no longer the £9,000 it was bought for, but it's been depreciated. So what we need to do is record this depreciation. Now you would need advice from your accountant on what reduction that depreciation has caused, and he will help give you guidance on that. But that's outside of the scope of this particular video. So what we're going to do now is we're going to go to the chart of accounts here, and we're going to go into the accumulated depreciation account, and I'm going to put this transaction, date it as the end of December 2021. That's the date of it. And in the account here, I'm going to use depreciation expense. And this is a decrease in value, so I'm going to put in here that it's depreciated by a third. So I'm going to put £3,000 in there. So if we look now at this particular account, you can see that the value of the asset has now gone down to £6,000 because it was the original 9 minus the 3, and then in subsequent years it would depreciate again. And if we look at the balance sheet, for the end of that year, we can see that the balance sheet is now recording this event correctly. Okay, I hope that's helped you understand a little bit more about depreciating assets and how to handle the depreciation expense. If we now look at the profit and loss report for this particular period, that particular year, then in that particular year you'll see that the profit and loss now reflects the expense, depreciation expense, that was incurred in that year, and that will, now typically this would be with all your other transactions in the year, but that's the only transaction we've done in this particular company in that year. So I hope that explains where that depreciation expense that was on the balance sheet has gone to. Okay, thanks a lot. Bye bye.